Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Paul Schroeder, QQQ Equity Product Strategist over at Invesco, to discuss the launch of the latest ETF in the innovation suite over at Invesco. It is great to have you with us, Paul. Welcome to Trade Talks.
Thanks for having me, Jill.
All right, let's talk about that latest ETF, investing in the next 200 future for the Nasdaq 100. What does the QQQS invest in?
Sure. So QQQS was launched last Thursday, and it seeks to replicate the Nasdaq Innovators Completion Cap Index. So what does that mean? So it gives you exposure to 200 innovative small cap companies. It does exclude the holdings from QQQ and QQQJ, so there's no overlap. And similar to those ETFs, it also excludes financials and real estate. So overall, the methodology of the fund and the index focuses on valuing patents in many different sectors and finds the most innovative companies within the small cap space. So it selects the 200 companies that have the largest patent value to market cap ratio, and then it equal weights those 200 companies, giving you fair exposure across the board. So what we've seen from the index is that the value of those patents of the 200 companies have grown about 315% since 2011. And to put that number into context, Jill, the Russell 1000 patent value has grown about 245%. So it definitely has surpassed that. What we've also seen is that QQQS companies have outspent their benchmarks from a research and development standpoint, where you see QQQS companies spending about almost 13% of all revenue coming in on research and development versus about only 2.2% of Russell 2000 companies.
Yeah, Paul, and that is always an interesting metric to cover because we have covered R&D expense in the Nasdaq 100, the regular QQQ. So remind us why it's important when you think about R&D spend and patents.
Sure. So as you know very well, Jill, with Nasdaq, that we believe that R&D spending and patents are probably the two best ways that you can actually quantify innovation. You know, what we've seen over the past few years is that the term innovation has become very subjective. So it's become extremely important for investors to have the ability to quantify it and differentiate truly innovative companies. You know, what we've seen, for example, from QQQ, similar to QQQJ, and as I mentioned with QQQS, R&D has been a key component of expenditures from these innovative companies. QQQ companies also have led patent filings for many disruptive technologies such as natural language processing and cloud computing. So ultimately what we feel is that strong R&D spending and strong patent activity along with increasing patent value really can help drive fundamental growth in the future.
And to wrap up here, Paul, why launch QQQS?
Yeah. Fantastic question. So really the main reason why we launched QQQS was investor demand. Now, obviously we give exposure to clients, to large cap innovative companies and mid cap innovative companies through QQQ and QQQJ, but investors really wanted to be able to tap similar companies within the small cap space. So that's exactly what we did with QQQS. You know, for example, with QQQS, it would have invested in Tesla back in December 2011 before it entered the NASDAQ 100 back in 2013. So we're really trying to capture some of these small cap companies earlier in their growth cycle. So overall, we really feel this ETF rounds out our overall innovation suite rather well.
All right, Paul, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.